Hi everyone, for those of you that watched my video on entry signals on how to enter a trade, you realize that I only gave the entry signal, but I didn't give the exit signal. That is to ensure that the video is not too long and not to bore some of you. Now, realize that before you enter a trade, you must have a proper risk management in place and must be able to backtest these strategies and also paper trade them so that you are confident enough to enter this trade, as I am not a financial advisor. So, how do we exit a trade? Remember I told you that before you can enter a trade, we use the 50 period moving average and we also had the Ichimoku cloud. So we said that to enter a trade, I'm going to close my moving average, that the blue line of the Ichimoku cloud should be above the red line. And we should ensure that the trend is an uptrend. If we come to the daily, we can see in the daily that we are in an uptrend. You can see price is above the moving average, so we are in an uptrend. And then the Ichimoku lines, the blue line must be above the red line. So you can see those people who are position traders would have made a lot of money because they would have entered this position right here and ride it to this point. So how do we exit a trade? If you have not watched how to enter a trade, please watch that video on my playlist. It is available for you. On how to exit a trade, we'll come to our indicators and type RSI for Relative Strength Index. The Relative Strength Index is a momentum indicator showing you the strength of the buying or selling pressure that is in the market. So, because we are scalpers or day traders, we want to look at lower time frames like the 4-hour charts. When we come to the 4-hour charts, we also want to draw our supports and resistance line. The Relative Strength Index is made up of overbought region, which is 80 and above, and oversold region, which is 20 and below. So it makes up 100. And now we can see that while price was going up, the strength of the index was coming down. You can see it right here, that while prices was going up, the strength of the momentum in the market was coming down, which means that weakness is in this market. And once you recognize that weakness in the market, it makes sense for you to exit your trade around this point if you are a scalper, if you entered around here. I hope you get the point. So, because the 4-hour time frame may not be what we want to trade, we may still come down to the 1-hour time frame. And when we come to the 1-hour time frame, we can see that it is more clearer now that while prices was going up year to this point, momentum in the market was coming down. So the sell-off was inevitable. So if I am trading this market, I would have seen that there was a drop in momentum at this point, and I could see the candlestick rejection, and I would have taken my profit here, and I might have missed this move, but I have made quite some profit if I entered the trade around here. I hope it is clear. So you may need to take time off to understand the relative strength index, because you've entered the trade and now you want to exit the trade. If I put in my 50 period moving average, you can see that my moving average was still below price, telling you that it's still an uptrend, but you would have lost money if you picked your profits around here, if you are following the moving average. At the same time, if we have entered our Ichimoku line, which was our entry signal, it could have taken us far to this place before we could take our profit, and would have lost some decent amount of profit if we did not take it around here. So I think the RSI is a good indicator to show us when to exit our trade, rather than following the Ichimoku cloud lines or the 50 period moving average. I hope it is clear, and if you need me to explain how to use the RSI, you can just drop it in the comment section below and I would serve that need. Please subscribe, like and share this video if you enjoyed it, and I'll be motivated to do more. Thank you very much. Have a great day.